Welcome to this new episode of Your Next Trade called today 50-50 for 25-50. So at the end of last session, we looked at the odds of the market bouncing after a fall. And we look more specifically at any fall more than 10%. And the odds were pretty bad as long as you go below 10% as a drawdown, where the fall could be most of the time between 20 and 40%. What happened in a matter of no time is the market, we are talking stocks, is almost at all-time high. And we are looking at the S&P, we are looking at the Nasdaq. So what happened? This is something that we're going to be discussing today. We had a lot of conferences and we had, should I say, the AI 3.0, 4.0, 5.0, whatever you call it, with semiconductors that pushed the market higher. But let's start with that, with the week that we're going to have, starting with the FOMC meeting. So next Wednesday, the Fed will be starting its cutting cycle that has been long expected. Why? Because inflation has been coming down, CPI, PCE, a lot of inflation data have been coming lower, still above the target or the mandate of the Fed. But what we have in the meantime, unemployment is above 4% if we are looking at the unemployment rate. So the Fed has a dual mandate looking at both inflation and at unemployment. So now, over the last 6 months, the Fed has been pretty clear on saying, we are less looking at inflation because inflation is going into the target, which is 2%. But we are more going into looking at the slowdown of the economy through the unemployment. And this is why they're going to be cutting rates. So if we look at the FOMC expectation, this is here for the FOMC meeting on the 18th of September, which will be Wednesday. The market is divided 50-50 between a cut of 25 bips, minus 0.25%, and or a 50% chance of a 50 bips cut, so minus 0.5%. So in other words, if you have been trading, the odds are literally flipping a coin, 50% chance they're going to be doing 25 bips and 50% that they're going to be doing 50 bips. So what is happening is there have been different messages coming from the FOMC people. We are talking firstly from Powell. Powell has been, I think my view is Powell would like to do a 50 bips. So if he's the boss, I think the odds are more for a 50 bips. The Fed doesn't want to do too much too quickly. And in the meantime, they don't want to be late into cutting the rate. So pretty hard decision. And as well, you do have like the US elections coming. So it's the Fed needs to be careful on making sure that they look at as much as independent as possible. So 50-50 for 25-50. Let's look now at what has been the week to date asset performance. And here we got stocks. We start with stocks. And on the left-hand side, we got the S&P, we got the Nasdaq composite. And this is the total mirroring of what we had the previous week. So the opposite. So as you remember, last week, we had one of the worst weeks for the last 18 months, so when the S&P was on 4.2%, and now the S&P for the week is up 4%. So very strong risk on. We are talking mostly about the US, where the US have been outperforming when Europe was up roughly 2%. And you can see as well the risk on through the eyes of cryptos, which has been up 13% for the week. Gold as well, so this is something that we're going to be discussing when we look at the technical analysis. WTI up 1.4%, but this is a bit misleading. We broke on the downside the 67 level to go to 65 and we bounced. So a lot of activity and a lot of volatility coming back into WTI into an important level, which is the $67. But copper as well doing well. What about the week to date industry performance? And really this is the one that is the more telling. You get here the semiconductors up more than 10%. So really a strong move. We are talking NVIDIA of this world. And what I would like to underline later is this is mostly due to the messages that have been coming from several companies about artificial intelligence and the capex that will be involved into that space. Other end of the spectrum, we got oil services that have been struggling, energy and US dollar flattish for the week. Here, this is your S&P. So that means overall, this is pretty balanced between the winners and the losers. Interestingly, I strongly advise you to do that. It's looking at every single day what has been outperforming in the market. On Friday, most of the stocks that have been pretty strong were the short interest stocks, many companies that are not making money. So when the first move is most of the time on the catalyst, and then at the end of a move you end up with people chasing the name, and this is what happened on Friday. What about the sector's performance? Looking at the week to date mostly, so this is the big winner, IT plus 8.1%, so really the big outperformer. Energy flattish, financial flattish. So we had JP Morgan that was talking, I think it was Monday or Tuesday, I can't remember which day, I think it was Monday, where the CFO came and said during a conference, you should probably lower your expectations for not 2024 but to 2025. So in other words, with the yields coming down, banks are going to be making less money, and the stock went down 6 to 7% and is now trading below 205. So as we are into September now, we will be looking at 2025 earnings expectations, and this is really important. 2024 is almost finished, so even if it's only we got 4 months left, but really, as an investor, you are looking at 2025 and what are the companies telling us. So JP Morgan is a really good example where the company is coming and say, look, guy, the consensus is a bit too high. You should be downgrading this consensus. So what about the rates? US 10 years, 3.65%, a bit down on the week, not much. Similar picture with the yield curve. So we have been trading sideways on the 10 years. We had some auctions that went better. I think it was on Wednesday or Thursday, and the market liked it. So overall, we are expecting and waiting for the next catalyst. What about the Fed fund rate? So this one is important. We got the FOMC meeting. As I said, it's a 50% chance between 25 bips and 50 bips. What's going to be super important going into the FOMC meeting and after, what the Fed, what Powell is going to tell us is the speed of how quickly or not they're going to be cutting rates. As we have been underlining, the market is now expecting 1.1% cut between now and the end of the year. So that is roughly 4.5 cut now. So pretty aggressive. As you can see, everything has been moving, coming down. So in other words, you have 1.1% cut expected with only 3 meetings left for the year. So that is, the market is now pricing odds that we're gonna have a 50 pips cut at one of those 3 meetings. For the time being, as I said, the Fed has been priced 50-50 for the first meeting, but we're gonna see more aggressive cuts. So what's going to be important again is the pace, is by how much the Fed and how quickly the Fed is going to be cutting rates going forward. What about the VIX? So roughly around 16.56%. So it's between 16 and 17%. This is no magic. At the end, in 5 minutes, we're going to be looking what are the reasons why we are around the 16, 17% through the VIX futures. So I want to jump quickly into the technical analysis, and I use a weekly chart, and I want to be starting with Oracle, which talk on both Monday and Thursday. So on Monday, they released their earnings, and on Thursday, after the close, they gave their outlook for 2029. And as always, this company is pretty optimistic about the future. But what they have been telling us, and that has been, I think, one of the reasons this week that the market has been pushing higher, is they have been pretty aggressive in saying, artificial intelligence is going to be staying there for quite a long time. We got 5 years visibility. There's going to be a lot of capex involved. We are talking more than 10%, 15% growth for the next 5 years in terms of top line. And that pushed obviously the stock higher first on Tuesday after the numbers, and on Friday as well, not only with options, but if you listen to the call and as well to the meeting that they had on Thursday, what they were telling us is many companies have been adamant to be buying Nvidia products, and those products, we know what that is, the semi, and I want to go into Nvidia because that has been the big mover of this week as well. We went from 106 to 119, but literally that was on Thursday. We moved 8%, and that pushed the market higher. So more or less the market for this week has been pushed higher by those names. We underlined last week and over the previous weeks that semiconductors and as well that tech was underperforming the overall market, and we were looking for new leaders. While we don't need that many new leaders when you go for AI 2.0, 3.0, and there is a new wave saying, we're going to be investing massively into that space, and that has been what pushing the market much higher. Nasdaq, is still 1,000 points away from the high, so 5%. If we look at the Russell, this is trading sideways despite the people saying over the summer it's going to be the new winners. If we look at the FANG, they have been trading sideways as well, so not much of a cast, at least for the big winners. CL1 to me is very interesting. I've been saying in the community through the free channels that 67 was an important level. It's still an important level. We went lower and we bounced. We didn't have that much volume for the week, but you can smell that there is more and more interest into that space. So really that is a space that I will be looking, especially with the election coming forward. Copper did pretty well despite China's numbers, something that we're going to be discussing later. Gold, the big winner. So gold is king. We are now at 25.77. We are going higher almost every single week. So very, very strong move on the basis of the Fed cutting the rate soon. What about euro dollar? Not moving that much. Dollar yen, yen still strong with the expectations of the Fed cutting. So that's going to be an important one on Wednesday, depending on if the Fed does 25 or 50 bips. And finally, a bit of Europe with the stock 600, not that far from the all-time high. Same with the DAX. So the trend has been pretty strong. Should we finish with the stock? So semiconductors still far away now from the recent highs. We are talking 16% roughly from the recent highs. So there is that means again market is very close to the all-time high, but the past leaders are quite far from the high. So I want to go back now into what happened for the week, as always, starting with the S&P. So this is the S&P for the last 5 sessions, and you can see the big move here. So first move, we get the CPI. Was it the CPI or the PPI? I can't even remember. I think it was CPI. So we dropped from 55.10 to 45.10 almost, and then we had this big ramp up of the market. Why? Because in the meantime, we get this big move. This is the one where Nvidia. So in September, what you have is the back to school season, and most of the time, many companies will be coming back and talking to investors through conferences. Okay, so we had many conferences the first 2 weeks of September, and we had Nvidia, we had Oracle, as I said, and we got JP Morgan. So JP Morgan was on Monday. We discussed that. It dropped. We got Oracle coming with their earnings, then talking everything is fine. You're gonna be investing a lot into artificial intelligence, and we had Nvidia. And as always, the CEO said, the Blackwell demand is very, very strong. In the meantime, I think it was on Thursday, there was some rumors about ChatGPT valuation, and the whole space went through the roof. And as you can see here, this is a very important chart. If you look at the Nasdaq versus, so that will be your Nasdaq here, and that will be on the left-hand side, your Nvidia. You see the strong correlation over the last 20-25 days. A bit of divergence happens on Friday, because as I said, on Friday most of the dodgy stocks went up and Nvidia was down on the day. But overall, strong correlation. So that was for the week as well. We had the debate, I think it was on Tuesday between Trump and Harris, and Harris won the debate. And actually a lot of renewables in stocks went up massively on Wednesday. CPI, PPI a bit higher, but for the time being, nobody cares. Okay, it's just saying, inflation, the trend is going lower. Don't look at inflation, we are fine. On Thursday, we had a bit of ECB. It's a bit like the CPI, PPI. Who cares? And to be honest, what's going to be happening next. And finally, I want to mention in Europe as well, for those who have been trading Europe, we've seen Unicredito, which is an Italian bank, buying roughly 10% of a German bank, which is Commerzbank. So in other words, this is the start of potentially a consolidation wave into the banking system in Europe, something that has been pushed by Draghi, which is the ex-ECB boss. And this week it was interesting because Draghi, came with a plan about, how to make Europe more competitive. And that was about, more consolidation into telco, more consolidation into the banking system, and as well for the overall Europe to be investing the same way. For the time being, Germans, as very often they will be, I've been saying 9. They are not really interested in that, but that's something that we should keep an eye on. And finally, through this wave of the artificial intelligence 3.0, 4.0, 5.0, you name it, I would like to underline, so that was on the 11th of September here, when Nvidia started the conference. I think it was around 3:15 p.m. UK, so 45 minutes after the open in New York, we started to see a big buyers of 115 calls, weekly calls for Nvidia. In the meantime, the stock push higher and the S&P push higher. So what we've seen is what has been happening over and over the last 2 years is very short-dated options. We are talking this week and the week after for Nvidia and for some other names, pushing the name higher and the market following. So we're now looking at the catalyst going into this week. Obviously, we get the FOMC meeting. So we discussed that 50% chance of 25 bips or 50 bips. We have as well a bit of macro. We get the retail sales on Tuesday. Last retail sales number was pretty good, and the market, you remember or not, in August lagged that number and saying, actually the US consumer is doing pretty well despite the numbers before and the market push higher. So we need to have a bit of confirmation of how the US consumer is doing. We had a lot of housing number as well to the NHB, to the building permit. So housing, retail sales. Earnings and conferences, we get less of them. And then, over the weekend, that was yesterday, we got some Chinese numbers. Retail sales, industrial production, home, and all of them were pretty bad. We know that China is going through a phase of going from external demand, from internal demand. It's going to be taking time, and that's one of the reasons why the GDP is lower. But we have to be keeping an eye, because the central banks, the politicians have been more and more saying that they might do something in the future. We get the Bank of England rate decision, no change expected, and as well, to me, the most important things in terms of market structure and how the market is behaving to expiries. We get the VIX expiry on Wednesday, and we get the options expiry with the index rebalancing on Friday. So let's start with the VIX expiry. Over the last few months, when we saw reversal, that was very often when we expired on the VIX, and this expiry on the VIX happens next Wednesday, at the open. I'm interested into looking at what is the positioning, and as you can see, it's mostly around 16-17% for the VIX. And guess what? This is where the VIX is now trading, 16.5. So it's very similar to the FOMC meeting, 50-50. Here, this is a 50-50. What I'm interested is later, after, when we get the FOMC meeting, and can we have an unwinding of those positions. If we look at how the market has been behaving most recently during FOMC meeting, it's pretty good. The market most of the time has been up. I mean, we are talking the last 6 meetings roughly. Before that, it was not that great. So we went from negative to positive. So those are the expectations going forward. Finally, option expiry on Friday. We know the third big expiry, quarterly expiry is a big one as well. We got some index rebalancing. For example, we got Palantir going into the S&P 500. So don't be surprised on next Friday, you're going to see tons of volumes. If you have some positions in futures, especially in September contracts, it is really time to roll those contracts into December. And finally, we get the SPY weekly straddle. So by how much the market is pricing the market to be moving, plus minus 1.6%. So this is it for the week. FOMC meeting, VIX expiry, option expiry. We are at all-time high almost. We are at 56.50 on the S&P, and the recent highs were at 57 above. So 1 to 2% from the recent highs. Short term, the big level for the S&P is 56.60, 56.65. If we go higher, if we break that level, then we carry on. My view was starting the month that we should have a big move in the S&P. I was expecting first to be breaking the 56.60. We went down. So I'm still expecting some funny moves. If we look again at seasonality, most of the time, I want to believe that, at the end of September, start of October, those are the worst weeks and the worst days of the S&P, of the market. So I'm expecting the same for the last few days and early days of October. So this is it for me for this week. If you got questions, you can reach me here. There is the trading community where I'm sharing some of those content as well. And overall, let's have a good trading week. Bye-bye.